Hey guys, Taylor the GammaEdge here coming at you with a post-market recap for October 22nd, 2025. So if you guys missed it, Michael and I were on intraday for 35 minutes talking about, what we were seeing um, right during the session. So I really don't want to reiterate too much of that because, all of our thoughts were there. I guess just a couple things to note real quick. Obviously going to the Discord real fast, all starts with our SPX game plan, which again, we had a pre-market video where we went through all of that stuff as well. So yeah, we're getting a lot of questions about like, oh, we were in a call dominant environment. Like, how did we sell off? All that kind of stuff. That's where we say you can't just blindly look at what the state of the market is, meaning call dominate, and just assume that the market is going to go up forever, right? Like we literally said in the pre-market, simply looking at our market trend model, little bit of a topping formation, expect consolidation, let the ribbon catch up. That's what we said last night as well, right? The bullish market signal, for lack of a better term, bullish momentum signal, lack of a better term, from the market trend model turned on Friday into Monday, right? We had a nice run up, and we were saying that this signal typically is a 1 to 3 day, 1 to 5 day signal. Had a nice expansion, but getting a little bit of a gap from the longer term moving average ribbon, so a bit of a consolidation made sense here. And so all of that is well and good, right? Like even if we said that, the market could have still ripped today, but that is where, again, taking into account our level analysis and then our intraday kind of volume analysis is critical. So we're not just, stubbornly continuing to go long when clearly today the market did not want to go higher, right? And that's where 0DTE levels are important, right? Like even if you're swing trading, understanding what the 0DTE structure is so we can understand, right, if we're above those key levels or below those key levels. Because like we saw today, when we lose the transition zone, that intraday volume to downside starts to come in. Not a good time to be putting swing trades on to the upside unless you like your trade starting out in the red, then in the green. But anyways, right, bottom of our transition zone today was 6730. And then what we were saying there is from there, 6,700, obviously key goalpost, ton of speculation there when looking at the distribution. And then, right, whole key psychological level. And then below there, it was, as we were saying, intraday, it's really just a factor of how low the market wants to go from there in terms of how much selling comes in, right? And so a couple ways we were looking at that. First off, market trend model, filter tick selling throughout the session. Obviously, you can see when it kind of let up, a little bit of kind of just a reflexive bounce higher. But anyways, this was, clearly a linear down day until the last hour or so of trading. So, right, that's kind of step number one in terms of understanding what the market is doing on an intraday basis. Step two is drawing a blank here. Sorry. Yeah, going to the vol command. Again, looking at this, we went over this in depth in our intraday YouTube today. But right, it was clear that there's zero call speculation to the upside for the majority of um, trading today. Right, and the way we see that is just a downward sloping of call speculation. In a normal bullish environment, when price is going higher, we have the opposite of what the calls did today, where call speculation is moving sideways to higher. Clearly today it was lower. Then same thing on the put side, right? When we see a move higher, the put centroids is pretty much a 45-degree angle higher, throughout the session. Obviously today, not the case at all. Distribution of speculation was wide. It was sideways to lower. So again, just keep in mind, right? Even if we're in the uptrend, even if we're in a call dominant environment, the market is allowed to go down. It is allowed to consolidate. So, kind of having the tools to help you understand on an intraday basis what the market is doing is important. Whether that be, the GammaEdge tools or whatever other tools you're using, you need to have that in your system. So, right, you're just not blindly putting on long trade after long trade after long trade, thinking that the market is going to go up forever. But enough about today, right? Like, it should be clear, right, between what I just said and then if you're, go back and rewatch our video from this afternoon, should have a very crystal clear understanding of kind of how to use our tools on an intraday basis. But now the damage is done, and where do we go from here? So first off, looking at the pre-market SPX PM complex, we are clearly below the transition zones. We settled today right at 6,700, right? Transition zone, bottom of transition zone, 6,730. So obviously that structure is going to update intraday, or not intraday, but overnight. We'll see how that positioning shifts, see if we maintain, call dominated environment, or if we see, a lot of those calls removed and those out of the money puts starting to come in. If those out of the money puts start to come in, that's how we start to see the turn in the market in terms of call speculation going out, put speculation coming in. Other thing to note is at our market trend model, our bullish momentum indicator is technically still on. So What does that mean? That means our mechanical strategies, the P2P strategy, the wheel strategy, still are looking for those long opportunities higher. On a discretionary point of view, generally um, feel less good about taking long entries when we're below the railroad tracks, the short-term moving average driven to the downside. We want to see a reversal. We really want to see this pattern right here start to emerge again, where cumulative tick is trending higher above short-term railroad tracks. So yeah, tomorrow we're just going to want to see tomorrow's right. Next couple of days is gonna be very important into the weekend. If we see a rebound, we see a continuation lower, or yeah, I don't know what else to say. Just seeing how the character of the market trend model looks. And I mean, yeah, just quickly, from a price action point of view, right? I mean, we're really just right in the middle of the range established from when the sell-off a couple Fridays ago. So I mean, it's just kind of choppy price action right now. So what does that mean, right? From a swing trading point of view, really just want to be focusing on those quality stocks, showing strength, showing momentum. That's exactly what the wheel strategy is used, helping to find those candidates that are call dominated, institutional momentum behind them. Also just kind of tightening up your risk, understanding, those moves to the upside may be a bit shorter just because in a choppier environment. So right, it's all just about having situational awareness right now, really having those if-then statements outlined. And then right in the community, really try to help you out to the extent we can. We were talking about kind of early in the session, market trend model. We were slicing through those moving averages. Those are generally good take profit signs. Ended up being the right call today. But other than that, we try to help you with bullish, bearish lists that you should be kind of focusing on when looking at those specific stocks that you want to be focused on trading, right? Call dominated stocks, understanding where the good risk to reward candidates are, which is what this scatter plot helps you. Understanding if it's close to P-trans, which is kind of the upside acceleration level, close to plus GEX, which is our upside profit target level, all that good stuff. So yeah, not a ton else to say. Hopefully you guys stayed safe out there today. And with that, we will be back at it bright and early tomorrow with YouTube in the morning, intraday, SPX gameplay, and all that good stuff. So you guys have a good night.